Okay. So let's do a few here. Let's do Robert Breedlove, and what is money? He has a podcast called What is Money? He probably has about 60 episodes. I'm only about 5 or 6 episodes in, and the first 9 are with the gentleman I mentioned, Robert Saylor. Yeah,
Wow.
Robert. I'm sorry,
Michael
Saylor. Sorry.
Yeah.
Michael Saylor goes into such depth, but he's not technical. He's a technical individual. He has his degree in mechanical engineering, and he is the CEO of a very successful analytics company. But he goes into such depth in a way that anyone can participate in it. So yeah, I really appreciate his perspective. So Robert Breedlove, I like him. Here's a guy I really like. His name is Rao Powell, and he's with Real Vision. I think it's called Macro, Real Vision Macro. So he is a lot on YouTube, and then he has a company. He started a company, Real Vision Macro. He used to be, I think, a VP at Goldman Sachs, and he was there. I think he was in the financial industry for 30 years, and then he wanted to do his own thing. He kind of stumbled upon Bitcoin around 2012, 2013, and the missions that he has for his company is to bring the macroeconomics viewpoint to the everyday person. And he did a great job. He did a totally off the cuff YouTube video where he talked about the coming exponential age. And he has such a great perspective on this, and it was top notch on this. And he has amazing guests. I don't always agree with the guests, but they're very compelling, and I really enjoy listening to all of them. I have yet to find a bad interview with him, so I like him. Oh, here's one. This guy's he's high energy. Anthony Pompliano. I might be spelling it badly, but if you just type in Anthony Pompliano, his nickname is Pomp, and he's on YouTube. He has his own channel. He does a great show. Does great interviews with people. Yeah, I like him a lot. And again, for me, it's all about, I kind of don't give a shit about the code. You know, the code is what it is, right? I'm not a coder, you know, and I'm never going to pretend to be one. But there are enough coders out there. There are enough people who verify the code, right? What I care about are the knock-on effects. I care about the first, second, and third order effects of Bitcoin and other crypto assets. And it is changing. The change is so deep and so wide that there's no one person who can grasp the entirety of the change. The best I can do is just be able to kind of keep up in one chain. That's about it. One lane. That's about as far as I can go with it, right? And when I listen to people talk, I'm like, oh yeah, that's a great point. I didn't think about that, but that's as far as I can go with it. It's not like I thought of it. This is me listening to a guy who's spoon feeding me this stuff. You know, non-fungible tokens. I wouldn't have thought about that in a million years. Yet someone creates non-fungible tokens. I'm like, oh my God, that's brilliant. That is brilliant. Why didn't I think about that? Right. Yeah, go with those. Go with those right there for right now. If you go, and Saifuddin Amos, he has his own channel on YouTube as well. Again, great interviews. If you want some of the more day-to-day stuff. Cryptos are us. This guy by a gentleman by the name of George. He just talks about kind of the day-to-day events with crypto. I like him. Plan B. He is really well known in the Bitcoin community, and he's come up with two. So Avi, you will really appreciate this. If you like fundamental analysis, you will really like this. He's come up with the stock to flow model and the stock to flow cross assets model. So this is stock to S2F and S2FX models. Basically, the ability to provide a valuation in dollars or whatever currency you want, a valuation of Bitcoin based upon the growth rate, the inflation rate of Bitcoin. And it is because of the fact that we know that Bitcoin has a predetermined growth rate, right? Or actually it should be this way, right? The inflation rate every 4 years, the inflation rate goes down by half, okay? And if you apply that to the total market capitalization, not just of Bitcoin, but real estate, gold, silver, diamonds, you end up with a linear logarithmic relationship between the price of a thing, or more appropriately, the total market valuation of a thing and its stock to flow ratio, or the inverse of inflation rate, right? So if the inflation rate goes down, the stock to flow ratio goes up. It's just the reciprocal. And so you can apply that very well. And it has like a 99% Pearson coefficient. If you look at gold, silver, diamonds, real estate, and Bitcoin, it's amazing how well it is. And he applied mathematical rigor to it. So yeah, look up Plan B stock to flow model. And he has his own website where he has 2 or 3 articles and he talks about stock to flow and stock to flow cross asset. So I'll leave it there with those. I may have given you more than I should have, but I'm sure you're going to dive right into the deep end. So yeah, enjoy that.
Thank you so much, Jay. This is like really gold information you're sharing with us. Really appreciate the generosity here. Yeah.
And these are people who are, you're welcome. Thank you for saying this, very kind of you. These are people who are current talkers and thinkers and podcasters about Bitcoin and cryptocurrency. The other side of it that I talked about before is the Austrian School of Economics. So you have the Friedrich Hayek, you have Ludwig von Mises. I'll put these in for Friedrich Hayek, who wrote The Road to Serfdom. You have Ludwig von Mises. You have Karl Menger. These are kind of the founders of the Austrian School of Economics. You have I think the 19th century French journalist, Frédéric Bastiat, who, as the name said, he's a French journalist, but he has such a keen understanding of economics, and he was able to bring that to the everyday person because of his experience as a journalist. He knew what would resonate with normal everyday people. So yeah, he could take some really deep economic concepts and make it accessible. I really appreciate his writings. Karl Marx, everyone knows Karl Marx. I recommend reading the Communist Manifesto. The reason why is because it is rife with logical fallacies. It is so irrational, but it's good practice to go through that. Again, that's something that you only read if you want to really hurt your brain.
Jay, on that, one of the original PowerPoints, you had some of the lies about Bitcoins. Do you have a few, just a few talking points? Like, this is not accurate, this is not accurate, this is not accurate.
Yeah, we can do that. So let's see now. Let me just do. Let me make sure this comes out right. Oh, here we go.
Yep.
Did it come up okay?
Yep.
Still okay?
Perfect presentation mode.
Okay. All right. So number one, it is run by a small group of hackers who can change this by merely changing software code. That is 100% not correct. So here's something that gets into some of the deeper aspects of what is good money. It is basically, it has to do with the network effects. It has to do with how everyone accepts or doesn't accept what is considered to be money. Okay. And what quote unquote backs Bitcoin is not gold. More importantly, it's two very important things: math and the network effects, right? The ability for everyone in the network to verify these transactions. Anyone in the network can literally open up any block, Bitcoin block, and verify all the transactions. That is an amazing thing. Try going to your bank, try to go into Wells Fargo and say, open up the books, let me verify that. You can verify every single transaction in the Bitcoin blockchain. So it is the network effects. Bitcoin is the currency of choice by criminals and for criminals and money laundering. That is so not true that a couple of the most famous dark web illegal sites have specifically said you may not use Bitcoin on our website because of what I said before around you can make the connection between the wallet and the account and the financial institution and the name and the address and the identity. So they have specifically forbade that. Even before this was the case, I think Bitcoin transactions at a certain point accounted for something like 1%. I'm sorry, 1% of Bitcoin transactions were associated with illicit activity, right? The vast majority of Bitcoin transactions are associated with institutions buying them, companies, family offices, ultra high net worth individuals like Jeff Bezos and Mark Zuckerberg, people like that who want to put it on their portfolio. The supply of Bitcoin can be changed ad hoc. That is demonstrably wrong. So as I said before, there are 21 million Bitcoin that will be mined ultimately, and it will end right around the year 2140. Okay. And the reason why we can say that so definitively is because the network will see if anyone tries to mine any more than the 21 million Bitcoin, the entire network will reject that transaction. That is a powerful, powerful thing.
Wait, did you say by 2140 or
Correct.
2040? 2140.
Mm-hmm. Yep. When 2140 happens, the last Satoshi will be mined. Okay, Bitcoin can be copied or forged easily. So if we consider that Bitcoin is an abstraction, right? It's not an actual tangible thing, it's an abstraction. And I won't go into it today. We'll go into it another day when we talk about the architecture of Bitcoin behind the scenes. But in a nutshell, technically I can have, as the blockchain grows, right? And you just keep adding more and more blocks to the blockchain. Technically, you can have two people or two parties that mine the same block, or sorry, they mine two different blocks. And technically, for a few minutes, you can actually have two blocks, two separate blockchains, excuse me, that happen for a few minutes. But that will stop probably in the very next block when the next block is mined. And there's one simple rule in Bitcoin. You always take the longest block. We'll get into that in more detail when we talk about the architecture of Bitcoin. But in a nutshell, if you go with that one rule, you always go with the longest block. You cannot you cannot copy Bitcoin easily. That's number one. Number two, you can do something, because remember, this is a network of literally millions of users and miners all around the world. Technically speaking, if you had the majority of that network, literally 51% of the computing power on there, technically you can take over the network, and you can cause the Bitcoin blockchain to go a certain direction. Anyone want to take a guess what the problem with that is? I'll give you a hint. Remember what I said is, if you take the aggregate computing power of all those miners in there, it's estimated to be 10 times larger than all the computing power of Google. What's the cost associated with running 10 times Google's network for, say, 30 minutes? It'd be billions of dollars, right? Who has the ability to do that for $1 billion and maybe only get a few $100,000 worth of benefit? Does that make sense?
Yeah.
The costs would far exceed the benefits. And this is something I've been saying to people, is that with Bitcoin and many of these crypto assets, the cost of doing something bad far exceeds the cost of doing something good. Basically, with crypto assets, everyone is motivated to do the right thing. Not just because of the moral implications, but because the economic implications, if that makes sense. Institutions want nothing to do with Bitcoin. Right now, that is demonstrably wrong. You go to Bitcoin Treasuries. It's either bitcointreasuries.org or bitcointreasuries.com. I can't remember, but they have a listing of publicly held institutions, publicly held companies that hold Bitcoin on their balance sheet. And these could be companies that have nothing to do with Bitcoin, they just want it. These could be companies that are hedge funds. These could be companies that invest strictly in Bitcoin. This could be family offices. This could be sovereign wealth funds, i.e. Saudi Arabia as a country holds Bitcoin. All right. Eventually, we may have central banks that finally say, we want Bitcoin on our balance sheet, not just gold, not just US dollars, but we want Bitcoin as well.
I think El Salvador has made the Bitcoin as the official currency.
Yeah, right. So that's right. El Salvador did that. And I think that we're going to see in the next 2 years, we're probably going to see about a dozen countries break ties, and they're going to go that route. I wouldn't be surprised if it's a slew of other countries like Cambodia, Vietnam, Thailand, Ecuador, some of the Central American, well, at least one of the Central American countries will do that, other than El Salvador, right? I think it will be the small countries, and then the medium-sized countries, and then eventually the large countries. Basically, it goes into what we call game theory, where it sounds good, like, oh, we're all going to hold the line, nobody's going to get into Bitcoin, but then there's huge advantage to being the early adopter, to be the first one who crosses the line and says, I'm going to do this, right? Bitcoin is a Ponzi scheme. Bitcoin is the exact opposite of Ponzi scheme, because it's what they call fully collateralized. Okay, meaning that you can't leverage Bitcoin. You can't put up $60,000 and buy 2 Bitcoin. You can only put up $60,000 and buy 1 Bitcoin. Your Bitcoin can be taken from you without your knowledge or say so. that's semi-true. This goes into the discussion we had about storage, right? If you self-custody and you encrypt your wallet, you know, again, go look for best practices around this. You're not haphazard. You do this with deliberation, as you should with just about everything in life, right? You do it deliberately and safely. Nobody can take it from you unless they want to basically beat you to death. But they can do that with anything, right? At that point, that's a whole other subject. But nobody can take it without your knowledge or say so if you do it properly. I want to show you the next couple slides, and this is basically the ratio of Bitcoin to silver and the Bitcoin to gold. So if we take a look at this, can you see this this graph?
Yes.
Okay. So this type of graph is what they call it a logarithmic scale, meaning every time you go from one line to the next, it's a jump not in units of like 1, 2, 3, but it's a jump in a full order of magnitude, meaning a jump of an order of 10. So 0.1, 1, 10, 100, 1000, et cetera, et cetera. So if we take a look at the ratio of the price of Bitcoin versus the price of silver, it started out, if I can find this with my cursor, way down here. So we're talking about very roughly 1/1000th of 1 troy ounce of silver, right? And as you can see, it has gone up almost in a straight line, all right? But remember, this is a logarithmic chart. So really, it's actually exponential. So to go from 0.0038 to 1,470. And by the way, I did this back in December of last year. Okay. So Bitcoin's gone up a lot more since then. So if you take this number right here and divide it by that number there, you get 389,000 growth. Okay. That's just Bitcoin to silver. Let's take a look at Bitcoin to gold. It does basically the same thing. It went from 0.000057. 1 Bitcoin could equal 0.000057 troy ounces of gold, which is like a flake of gold, right? To now, 1 Bitcoin, well, not now, back in December, 1 Bitcoin could almost buy you 20 troy ounces of gold. Again, this is back in December when it was almost 1/6 the price. Okay. Again, if you take this number right here and divide it by that number right there, you get almost the same thing, 363,000. All right. But this is over 10 years, right? And again, this is also a logarithmic chart right here. So this is really exponential growth. Okay. Notice I don't have anything here about dollars. I don't care about the dollars. The dollars are just a scorecard. I don't look at Bitcoin as an investment. I look at Bitcoin as the future of money. Okay. And the reason why I'm putting this in there is because gold and silver were considered to be the standard for literally thousands of years when it came to sound money. And they did a great job. Okay. I want to show the evolution from one form of sound money to another form of sound money that in the course of a decade has improved 350,000 times as much. Okay. And there's still room for growth. I think we're still at the beginning of the growth of Bitcoin.
Wow. So that was a world-altering statement you just made, that you do not look at Bitcoin as an investment, but rather as, what did you say? I wrote the future of money because I didn't.
That's right. It's the
okay.
It's the future of money. Is the future of money. And those societies which used sound money or good money went through intense periods of growth and wealth creation for their entire society. You take a look at the United States, and this is in the book, the Bitcoin Standard. You take a look at the United States from 1870 to 1914, they were solidly on the gold standard. they had in some, quite possibly in the United States, the best growth rates in the history of the country.
Wow.
The entire country benefited from that.
Well, not everyone, but.
But in terms of I'll say ubiquitous, the ubiquitous advantage for society, that was the best that we'd ever had. Of course, yes, you're never going to have 100% of anything, right? But we didn't have institutions that could benefit from being right next to the money printers. That's called the Cantillon effect, where those who are closest to the money printers benefit the most. The ones who are furthest away from the money printers, not only do they not benefit, they actually end up being suffering the greatest detrimental effect of their loss of purchasing power.
Wow.
So I had one question, Jay. So there are like a couple of, typically in the stocks or like options, right? Like we have some indicators like, like earnings season or something, which kind of introduces a volatility in the positions, right? Like that, is there any industry-wide actions which happen in the Bitcoin world, like apart from Elon Musk talking about something, right? Is there anything like a widespread pattern you've noticed where when this thing happens, we see volatility in positions? Right?
Yeah. Okay. So let's get into the realm of FUD, F-U-D, fear, uncertainty, and doubt, right? They always push, these are short-term effects that push the price down, right? So that's one thing. Another thing I've noticed is what I talked about before is the options market affecting the futures market, affecting the Bitcoin market, right?
Right.
Something else that was interesting is things like China banning cryptocurrency transactions. That always causes fear, uncertainty, and doubt. So those are things that have adverse effects on the price. There are and like so many other things in the stock market, it's the psychological effect, right?
Right.
It's the short-term rapid reversal, the rapid drop in the price of something. Okay.
Right.
What do we want to focus on? We want to focus on the fundamentals, right? Because those are what drive the little ticks up and up and up slowly over time. So what does that mean? In the case of Bitcoin, it's, again, what I said before, it's about the network effect, right? It's how the network is adopting this. So anytime you have Square adopting Bitcoin, Cash App adopting Bitcoin, PayPal adopting Bitcoin, Venmo adopting Bitcoin, Visa adopting Bitcoin. Anytime you have Michael Saylor going in the market and say, we just bought another $1 billion worth of Bitcoin. Anytime you have another institution saying we've added Bitcoin to the balance sheet. Here's the sad part about it. Well, good about it. I don't care. They don't have nearly the magnitude of upward movement that the FUD creates as a negative movement. But because these are all aspects of network adoption, they have longer and more positive impacts than the FUD. Because FUD comes and go, typically in less than a week, it's in and it's out. But everyone remembers Cash App, Venmo, PayPal, Visa, Michael Saylor, MicroStrategy, Fortress, right? They all remember these things. And these are things that are multi-month, multi-year events. So the things I would look for are the things that cause positive network effects.
Awesome. Thank you so much. Is there any website, like for example, if for stocks, right, if there are websites where you can see like what the institutional investors are buying in bulk and things like that? Is that
Can you say
for the stocks, you could potentially go to some websites and see what the institutional investors are buying, right? The hedge funds are buying, or at least at a very high level, because they have some disclosure to make.
Yes.
Like, is there some kind of website where we can go and see like the similar data for Bitcoin or Ethereum? Like,
So it's actually what Susie put in the chat. It's right. Is that what you put in the chat?
Yes,
Susie?
I did. And I'm just looking at the companies that you listed, Square and Tesla. And now I'm looking at countries and governments. Bulgaria.
Yes.
Yeah.
Bulgaria. They bought it like 5 years ago or something like that.
Oh my God. And the biggest amounts, Ukraine, Finland, and then
Mhm.
El Salvador, like you said, the country of Georgia. And that's all that's listed. And
Yep.
then
wow.
yeah, private.
Do not be surprised if the Central Bank of Hungary, I think it's called the Magyar Nemzeti, do not be
Wow.
surprised if they put Bitcoin on their balance sheets.
Wow.
So I think if I understand where you're getting at, Avi, is I like where your head is oriented, because that is fundamental analysis that leads to true fundamental price movement.
Okay, gotcha.
There's another website that's very similar to the website that Susie put on there. I'll have to see if I can find it, but they don't show just companies, but they actually show private individuals too, I think. I don't remember if Bitcoin Treasuries has private individuals, but yeah, it's pretty cool. And yeah, Michael Saylor was a real iconoclast for him to go that direction. And by him doing that, he opened the cultural floodgates, the cultural business floodgates for other companies to do the same thing. They don't have to do a lot. They may only put $100,000 worth of Bitcoin on the balance sheets. They may put $1 million. But considering there are many, many people who are expecting Bitcoin to go up another 10x, that's impressive.
Mhm.
Wow.
Awesome.
So let me ask you something. I kind of in the last few minutes of our time together, I have some topics that we can that I had put up. Can you see? Shoot. Come on now. So I had put some other topics here. You know, right here. What is money? The reasons for going for Bitcoin, financial products, how to get Bitcoin, financial risk. We've actually talked about some of this already. Would you like to talk about, or let me rephrase that. What would you like to talk about in the future? And would you like to talk about the architecture of Bitcoin without going into a lot of technical detail? What would interest you?
I appreciate hearing this many times in many different ways, because I'm trying to figure out, well, how might I play? I'm the oldest one of this group. I am 65. I cannot retire. I don't have money to retire. I adopted 2 daughters from the other side of the world when I was 45. So they're now 21 and 23. And I want to be able to advise them. I want to know what's possible for me in this realm, given I'm going to be I want to be a happy, healthy 100. So I plan to be here for a while, and I want to know, what's in it for me? What might one see? And I don't have a lot of assets to convert. So I'm so appreciate the education. I'm wild about it.
Cool. Thank you. I appreciate that. The tortoise and the hare, right? Slow and steady wins the race. Honestly, the way I think Bitcoin's going to go, You don't have to put a lot in right now, but create a methodology that works well for your personality. Again, I'm getting back to my experience as a trader. There are many different ways to be a trader, right? You can be a trend trader. You can do open range breakout. You can do intraday trading. You can do whatever, swing trading, whatever. You have to pick a form of trading that matches your personality. You have to pick a form of investing. I'm going to call it investing for now, that matches your personality. Okay, I think this is really important. You know what? We'll do. I'll restart the clock. We'll do another because I think this is actually an important thing. If you want, let me. Yeah, when we get to the end, I'll just restart the clock because I think this is important. I'm not going to BS you and say that, you know, you're going to become a millionaire or anything like that. You may or may not. I don't know. I will. I'm about to tell you something that's I don't tell many people, but I think my Bitcoin portfolio will create dynastic wealth. Okay, and the reason why is because I got involved, you know, years ago, literally almost a decade ago, but you don't have to go for that, okay? And you can go for something that is still effective for you. And by the way, I hope you have a good relationship with your daughters. This is something they can participate in as well. Okay?
Yes, I do, and I do.
And I think that also this is something where you can set things up. So Bitcoin is not the only game in town. Okay. As Avi kind of talked about, he mentioned
Ethereum.
There's Ethereum, there's Cardano, right? And more importantly, and this is something that's really, really important for, I think, a person in your position, it's the income, right? There are other institutions that will actually offer you cash flow or interest on your crypto assets. Does that make sense?
Yes.
And something that I had put in the other presentation in some of my forecasts about the future is that interest rates are going to go back to where they should be, which is basically in the 4 to 8% range, maybe 4 to 10%, right? Those are the real interest rates, and that's what they were back when were on the gold standard. Okay, so if you think about it, how would you feel about earning 7 to 8, 9, 10% interest on your portfolio? That's not bad. That's not bad at all. People will kill. And by the way, using the rule of 72, a 7% rate of return on your portfolio, you literally will double your money in 10 years. Do you know the rule of 72?
No, I love it though.
I'm gonna stop this presentation and then we'll restart. I'll explain the rule of 72. All right.
Okay.